when you're talking about a regulated stable coin, you're talking about a CBDC, a central bank digital currency. You're talking about USDC, the circle coin. You're talking about a Fed coin. You're talking about a surveillance coin, and you're removing one of the best aspects of Bitcoin in that the on-ramp would be outside of the banking system, right? Bitcoin exists outside of the banking system. And so when you have a regulated stable coin, you're creating a regulated on-ramp to Bitcoin and defeating the purpose of Bitcoin. So in this piece that Michael Saylor mentions, I completely disagree, and I think it goes against the ethos of Bitcoin. This is something that he and I have talked about before. I'm 180 degrees in opposition of this idea. Well, Tether is working great. It's the biggest one out there, and they just added the Mexican peso, and they added the British pound. They have the U.S. dollar. I believe they have the euro, and it works fine, and it works for the unbanked. So the Tether model is fine, and it will resist being encroached upon by nefarious regulators. It's unconscionable that Gary Gensler and the SEC would allow this to keep going without having a spot ETF in the marketplace, and by allowing things like a futures Bitcoin ETF to exist. And the futures-based ETF products are notoriously horrible. They almost never work. And they're not suitable for retail. They're not even suitable for institutions. They're not suitable for anybody. And yet somehow these things have gotten into the marketplace. Other countries have spot ETFs. Their argument that there's no good price discovery in Bitcoin is fallacious. It's false and easily disproved. And so again, when it comes to the SEC, it's really hard to understand who they're working for. Are they working for the open and transparent markets on behalf of investors, or is there some other agenda going on? I cannot for the life of me understand their reasoning behind this. It seems to me to be some element of corruption here going on. Obviously, a lot of people don't want Bitcoin to succeed because it challenges them and it challenges the banking system. I mean, is that what's going on? Is there a conflict of interest? Because it makes no sense. I'm an expert in this area, having invented a virtual currency in 1996, a patented virtual currency in market making and securities. I mean, I am one of the foremost experts in this in the world. And I've looked at Gary Gensler's reasoning on this, and it doesn't add up. And in conjunction with the other decisions he's made, as we've said, failing to enforce some of these obvious scams. I mean, I really question this guy's integrity. I really do, Bob. It would definitely be helpful for Michael Saylor because as a corporate officer, he has to comply with a lot of regulations. And he's also trying to get his other corporate CEO friends involved, and there's a lack of it for them. So as a reserve asset for a corporation, he's seeing a paucity of guidance from regulators that would help him communicate with his stakeholders and investors and to other CEOs and CFOs out there that would be interested. So it would help institutional or corporate adoption for sure. Ultimately, it doesn't matter to Bitcoin as such because it's a self-regulating entity. It doesn't need regulation. It regulates itself. Bitcoin regulates the regulators. So it doesn't mean in the long run, it doesn't mean anything to Bitcoin. But it'd be great for him to be able to, on his 10Ks and 10Qs, refer to something that was written by the regulators to guide the ship of Bitcoin, that he's trying to put together there. So it would definitely help him. There was a definite lack of liquidity going on. So, Mt. Gox was the only exchange around, and it was incredibly buggy and wasn't suitable for making markets. And so when it started to blow up, you had a pretty predictable fall in the price. Other exchanges that were dominant, like BitMEX and others, were run without much thought to concern about hewing to regulatory guidelines, let's say. I think when Saylor first started buying Bitcoin, he made the comment that maybe 50 million a day in volume was actual Bitcoin. The rest was wash trading. Bitcoin has had a wash trading problem for years. Exchanges trading their own accounts to create stimulated volume. You see that in the NASDAQ market all the time. NASDAQ is a network of dealers, right? It's not like the New York Stock Exchange where you have a specialist at this post making a market. You have a network, and NASDAQ is for years guilty of wash trading amongst themselves to create the painting the tape and all these other techniques to create the illusion of volume and to manufacture prices. And Bitcoin had this problem for years. And so when the sentiment changed, you would have an 80% drawdown because there's just no volume. There was no volume. Now, what's different here is that over the past, let's call it the Michael Saylor era of the past several years, the volume has become legitimate and the demand is legitimate. And so the markets are legitimate. But the issue here would be the layering on top of this market of these derivatives or DeFi and cross collateralization. So that's created an obstacle for good price discovery. So that would be the difference. But the net effect is the same. People always, of course, ask me and ask you and ask others for price predictions. And it's an incredibly volatile asset. So it really is incredibly difficult to make a price direction other than to say that what I've been saying for 11 years, I'll tell you the direction of Bitcoin. It's up. If you hold it for maybe 3.5 years, anyone who's held it for 3.5 years or 4 years is in the black, right? So if you've got a time frame which is not a long time frame, 3.5, 4 years, you're going to be in the black. But I think that would be the main difference is that also, in this environment, when I was at the Bitcoin Miami 22, the conference, the difference between that conference and let's say a conference from 10 years ago was the quality of the suits, right? So the people on stage are wearing, $3,000 suits. Back 11 years ago, 10 years ago, people would show up in torn t-shirts and there were coders and, rarely came out of their basement. But it's the same kind of struggle to come to terms with this emerging asset class. And in a lot of ways, it's the same. You just have a higher grade of speculator. You have, of course, the amount of money that's been flooding the system has increased every year for many years now. I mean, we got to the central banks have decided within the last 6 months to raise rates and really put an end to a 40-year bull market in the bond market. So on the macro side, this is the first time Bitcoin has faced a rising interest rate environment, which causes on the macro side a huge shift in the funds. You see, for example, something like the Russian ruble is the strongest performing currency in the world in 2022 because it's commodity based. I think starting in February with the Russia-Ukraine conflict, we saw the end of a 40-year bull market in bonds and financialization and the beginning of a secular inflationary move in global markets that'll be tied to commodities. Commodities were not a big factor for 40 years. It was financialization, interest rates, extend and pretend, just create more bonds, lower, the coupon rate, extend the maturity. That's the way the world worked for 40 years. Now we're in a new world where suddenly the price of stuff like energy and food, it cannot be hidden anymore. It's actually hitting people's bottom line, and that's not going to change anytime soon. That's a secular shift in the inflation in the economy, in the globe, that's going to be with us for years, not a few months. And so that's something that is new for Bitcoin. And ultimately, it's going to do well in that environment because as people begin to understand that the financialized world is crumbling, having I often say Bitcoin is a risk-off investment. It's not a risk-on, it's a risk-off. This is where you put your safe haven cash. It's hard to make that case with the volatility the way it is, but when you have something for all the other reasons, it's unconfiscatable, uncensorable, immutable, it makes sense. And it makes a lot of sense for 1 billion or 2 billion people out there that have been unbanked. That's where the growth's going to come. That's where the adoption's happening. So those are the changes. Some differences, some similarities.